Are the AI stocks in trouble? Primarily Nvidia, which means that the stock market would be in trouble if that is the case. Why? What happened? Well, on January 20th, DeepSeek, which is a Chinese company, released a version of their large language model called R1. Think of it like their version of ChatGPT. If you read their white paper, supposedly they only did this with $6 million in costs, and they were only using H800 GPUs. These are older NVIDIA GPUs. With NVIDIA shooting towards that $4 trillion market cap, why would this be a problem? Well, if China is able to do what the world is able to do, supposedly with much, much less compute power, then what is the need for so many NVIDIA GPUs in the short term? So in this video, I'm going to be covering what we know about DeepSeek so far. What are the implications to the AI stocks and more specifically to NVIDIA? Because as NVIDIA goes, the market goes. You can't imagine a point at which NVIDIA, say, drops 40% and the market is still upheld, right? For instance. And why this story added to the already expected volatile environment of 2025 and beyond. We'll go over some of these major catalysts, including Trump versus the Fed, the fact that yields are out of control, and then you throw this onto the fire. 2025 is definitely not a year to F around and find out. Towards the end of the video, I will be going over my trades, my positioning, and what I'm doing right now based on the information that we know. Everything will be timestamped below, so you definitely want to stick around. Let's get right into it.
China's latest AI breakthrough has leapfrogged the world.
I think we should take the development out of China very, very seriously.
A game-changing move that does not come from OpenAI, Google, or Meta.
There is a new model that has all of the valley buzzing.
But from a Chinese lab called DeepSeek.
It's opened a lot of eyes of like what is actually happening in AI in China.
What took Google and OpenAI years and hundreds of millions of dollars to build, DeepSeek says took it just 2 months and less than $6 million.
They have the best open source model, and all the American developers are building on that.
I'm Deirdre Bosa with the Tech Check Take, China's AI breakthrough.
All right, so there you have a little bit of a summary from CNBC. Now, first of all, I have some things to comment right off the bat. The way that CNBC framed it, it's as if that DeepSeek went out and built this stuff from scratch. However, it is widely known, or I should say widely suspected, that DeepSeek definitely used existing models in order to build on top of. Now, I'm not saying that what they did wasn't impressive, but like everything Chinese, whether it's the Chinese Tesla or the Chinese Facebook or the Chinese Google or the Chinese Amazon, right? They take existing models that most of the time exist in the United States, use that and create a Chinese version. So it is very, very likely, as this says, there are strong indications that they heavily studied and analyzed existing models like OpenAI's ChatGPT. Secondly, when do we ever rely on Chinese accounting? Now, I'm talking about the geopolitical situation here. This is not an indictment on any group of people, right? We're just talking about countries that definitely have a vested interest in competing in these industries that have not only military implications, but obviously monetary implications, global power implications, right? So there's already an incentive to come out and say, hey, look what we did for so much cheaper, right? So that 6 million number that they keep throwing out, even in DeepSeek's own white paper, it says, note that the aforementioned costs include only the official training of DeepSeek v3, excluding the costs associated with prior research and ablation experiments on architectures, algorithms, or data. So we don't even know what they spent on prior R&D. Secondly, they said that they are using H800 GPUs. They said that their cluster, it's down here somewhere, on our cluster with 2048 H800 GPUs. The H800 GPU is NVIDIA's older model. Right now, NVIDIA is using the selling the H100 Tensor Core GPU, which is the most powerful AI GPU that is on the market currently. If you look here, the H800 has a chip-to-chip data transfer rate of about 300 Gbps, which is about half the rate of the H100. The H800 is available in China, Hong Kong, and Macau, while the H100 is not. Now, I want you to take a look at this clip here. This gentleman's named Alexander Wang. He looks like a kid. He's 28. He runs a company called Scale AI. Now, he's American, even though He's of Chinese heritage. He's American, and Scale AI actually has a ton of contracts with the US government. So here's what his suspicion is on what DeepSeek is actually using.
The Chinese labs, they have more H100s than people think.
And these are the highest powered NVIDIA chips that they were not supposed to have.
Yes. My understanding is that DeepSeek has about 50,000 H100s, which they can't talk about, obviously, because it is against the export controls that the United States has put in place. And I think it is true that, I think they have more chips than other people expect.
So there you have the CEO of an AI company that's based in the US that has contracts with the American government telling you that he suspects that China has H100s. They might have purchased them on the black market, which would, all it would take is just money that their government can print. But it's very important to remember that those H100s are banned in China, right? Per the restrictions that the US has put on those chips being shipped to China, right? It's very important to remember that. Why? Because even if they were using H100s, do you think DeepSeek can print out a paper and say, actually, we're using 50,000 H100s? No. So there are two incentives here that DeepSeek is playing off of, right? They're playing off of the fact that they cannot report the H100 chips if they have them. So there's an incentive not to report them because they can't say we have them, right? That would be, I don't know, an act of war maybe. That's a little bit of hyperbole, but it would be against the sanctions of the US government, right? And two, they have an incentive to say, hey, you dumb Americans, look what we're doing with much less compute power. We are so much more talented in this space, in the arms race, in the AI arms race, that we are doing this with much less compute power. You guys didn't give us the H100 chips, and we're still doing better than you. And I saw this take here on X that I agree with for the most part. What's more likely? One, a small group of AI engineers at DeepSeek figures out how to beat all of the top researchers in the world as a side project. Or two, the Chinese government has 100,000 GPUs that they shouldn't have and releases open source models claiming 6 million training cost as a PSYOP. Oh yeah, and that's the other thing. The DeepSeek R1 is open source, meaning anybody can use it. So how does this relate to Nvidia and Nvidia's stock price? Well, if Nvidia's stock price is based on this insatiable demand for GPUs because compute power is the most important thing. The more compute you have, the more operations you can run, the better your LLM will be, your large language model can be. So if China comes out and says, hey, we don't even need the H100s, we could do amazing stuff with a lot less, then yes, of course, if that is true, and it's true that now other operators can scale this model using the same, I don't know, primitive tools that DeepSeek claims to have used, then yeah, of course, that is going to depreciate Nvidia's stock price in the short term. But this, in my view, is assuming a lot of things. This is assuming that DeepSeek is telling the truth. This is assuming that they don't have black market H100 GPUs. This is assuming that there are no geopolitical incentives to say this stuff, to say that, hey, here's an open source model that we gift to the world from our really talented team of engineers that did this with peanuts. We actually did this with a wood and a few nails and a hammer. This is how we built this. And we built something so much more superior to those dumb Americans, right? It's assuming that there are no geopolitical incentives to lie. It assumes that their accounting costs are true, which we've already seen companies, tons of companies being delisted off of the New York Stock Exchange because they cannot represent their accounting in a way that the United States deems appropriate and required in order to be listed as a stock on the New York Stock Exchange. And I really have one more thing to say as it relates to AI, the AI industry, right? We know it's in its infant stages. We haven't even scratched the surface, right? We haven't even scratched the surface if you just take one aspect of AI, like AI autonomous driving, right? We haven't even scratched the surface of that, let alone every other thing that we're talking about, whether it's robots in warehouses, whether it's large language models, whether it's using AI to perform surgeries, etc. But what growing industry have we ever seen that has shrunk because of efficiency, right? Phones became more efficient. We sold more of them. CPUs became more efficient. We sold more of them. PCs became more efficient. Cars became more efficient. We sold more of them, right? Car engines became more efficient. As things become more efficient, it actually becomes easier to scale, and the volume becomes even greater. The volume of parts needed becomes even greater. It's just the parts themselves are more efficient. So I'm not Nostradamus. I have no idea whether they're telling the truth. I'm just using Occam's razor sort of thinking, right? The simplest answer is probably the most likely one. Now, I personally have no idea how the market is going to react in the very short term. I mean, in the coming few days and weeks, with regards to this news specifically. I have no idea. I don't know if the market will believe them. But there's one thing we know about the market currently. It's what I've been saying for months now, right? It's that the yield curves are uninverted. We obviously have all-time high after all-time high. We just made another all-time high in the SPY on Friday, January 24th. Trump and Jerome Powell are going to go at it for the next 4 years, where Trump is going to try to get the Fed to lower rates to zero. The Fed already said that their terminal rate is 3% and that they're not going to lower the rates. We have an FOMC meeting coming up on January 29th, which they are not expected to raise rates. I mean, lower rates. They're expected to keep rates where they're at. So we will hear Trump's first words after this FOMC meeting if they decide not to cut rates. Yields are out of control. They are now just fleeting, right? The 10-year going close to 5% again. And it seems that the Treasury, the Fed, nobody can control these yields. This is the first time in history that the 10-year hasn't been lower 100 days after the Fed has cut. The 10-year has actually been much higher. We went from a low of 3.6 to a high of 4.8. And we have all of these earnings coming out next week. If it wasn't enough drama, we have a ton of the AI and chip infrastructure companies that are reporting. ASML is reporting earnings. You can see here that Lam Research is also reporting earnings. We have IBM reporting earnings. We have Meta reporting earnings, and then big companies like Tesla and Apple reporting earnings as well. Wednesday is going to be absolute fireworks. Tesla, ASML, Meta, Microsoft, Lam Research reporting earnings on the same day that the Fed is doing the FOMC meeting. So how would I play this here? Well, here's what I did already in full transparency. On the option selling front, I already started selling calls against my shares. So I sold calls against my Nvidia shares. I also sold calls against my Google shares. What this essentially means, if I sold the 220 cover call on my Google shares that I bought in the 150s, what essentially that means is if Google's not 220 or above by expiration, I keep the money that I sold the calls for. Or if Google drops, then I keep the money that I sold the shares for. So it's kind of a protection against my shares. Second thing I did was I bought VIX calls on Friday. So if you look at the VIX here, the last FOMC meeting, the VIX actually ran 74%. And when I look at the VVIX over VIX, I'll explain what this is in a second, but you can see here that the VVIX over VIX is actually heating up. Now, the VVIX is a measure of the VIX itself. So the VIX is a measure of volatility for the market, and the VVIX is a measure of volatility for the VIX, meaning how volatile will the VIX be. And when you see it heating up like this, it usually means that in the very short term, it is very possible for the VIX to go haywire. Another reason why I bought the VIX was because of the obvious low level consolidation that we are at now. And based on what I know in terms of how Trump will react to the Fed if they don't cut rates, I do think that there could be some fireworks on that day. So I bought the VIX as a hedge. You can see here, I bought the 15 call expiring February 19th on the VIX. And in terms of Nvidia, from this price point here, I don't think there is a move to make. I think that you are in luck, because at this price point here, you can actually wait to see what happens. Nvidia, we did buy it once it hit our demand zone right here. You could see the engulfing candle on Friday because the DeepSeek news was already out. It just started to heat up over the weekend. And in my view, you'll want to see whether the market actually believes this story coming out of China. And if they do, and you end up seeing a washout here, right? Because so many people are long Nvidia. If you see a washout here, that will give you an opportunity to pick up Nvidia on the overreaction. Because in my view, even if this is true, all that means is that what's expected is happening sooner than we thought, which is that AI is going to be more efficient. But as it becomes more efficient, there will be more use cases. Many more companies can now join in, because where it used to be so expensive to take part in this, now you can actually join in at a much cheaper price point. So the volume of AI R&D will go up, in my view, right? So if we do see an overreaction, and we might not, but if we do see an overreaction sell on Nvidia, that will give you the opportunity to jump in at a lower price point. So in my view, from a shares perspective, from an options perspective, unless you are selling covered calls, this is a wait and see on Nvidia stock price. But in the long term, I think Nvidia is safe. Now, besides the VIX calls that I bought, and by the way, one of the other reasons I bought the VIX calls, I just want to explain something here, is that if the Fed doesn't cut, then I think that Trump will continue to antagonize them for that. If they cut, then it will show that the Fed actually doesn't have any control and they're kowtowing to the presidency, which they should be independent from. So I think both scenarios can cause fireworks. So that is why I bought those calls on the VIX. Now, from a market perspective, like I said, the 10-year and 3-month has now uninverted, and we've never had a recession when this uninverts. It can take as soon as immediately after it uninverts, like in 2001, or as long as 5-6 months like it did in 2007. I don't know. I'm not Nostradamus. All I know is that I'm very careful here. I'm not buying a ton of stocks here. I don't think this is there are some few picks here and there, right? Some nibbles here and there. But I don't think that this is a go on a shopping spree type of environment. We are already coming off back-to-back plus 20% years in the S&P 500, which is very rare. Coming in with the yield curve uninverted, with the 10-year, with the Trump versus the Fed fight, and now with the potential for the market to interpret the AI bubble as being a bubble in the short term. Now, as I said, the industry itself is in its infancy, but it will go through ebbs and flows of bursts and blowups based on how high the valuations have run in comparison to the returns from the R&D spend on AI that the market can visualize in the medium term, right? So obviously, these companies are now pumped to the high heavens, but now the market's going to want to see some returns on this AI spend. And if the market not only doesn't see those returns in the midterm, but also sees that the industry is interpreting that you need much less compute power, then it could see its first bust before then growing once again, right? We saw this with internet companies too, like Google and Amazon. They went through so many boom and bust cycles, right? There was the initial wave of the internet hysteria, and then with the dot-com bust, even companies like Google, Amazon, these powerhouses that we know now went through their bust cycles before then showcasing that, hey, actually, we can make this stuff profitable. We can make things on the internet profitable. And then you see them rally again. Then you see the bust cycle once again. Then they start getting into things like cloud computing, etc., growing their valuations, growing their companies the way that you're supposed to, right? So AI is going to suffer similar boom and bust cycles. So whether this is the first bust cycle, I don't know. But with all of the other ancillary things that I talked about, I'm not really that optimistic for the market in 2025. And, you know, I think that there will be a lot of money made, but you really have to be on your P's and Q's. And if all you know how to do is buy stock and sit on it, I think you're going to miss out on a lot of opportunity in the volatility. You have to know how to play the volatility. I might be doing a separate video on Tesla earnings, but if you look at Tesla earnings, and I want to pull up Market Chameleon here. If you look at Tesla earnings, you will see that on earnings, I noticed something very impressive here and important, is that the options market overestimates Tesla stock earnings 17% of the time. This means that 83% of the time, Tesla beats the expected move, right? So for this reason, I might play a long strangle on Tesla come their earnings on Wednesday. But it's stuff like this, right? Playing the volatility, playing a strangle in this case, for instance, right? Knowing when to short the market, knowing when to sell cover calls, knowing when to exit. This stuff is so important. I think the next 4 years, a lot of money will be made because of the new administration and the fact that they aren't just going to sit back and let things play out. They are going to be very active in things such as the FOMC decisions, etc., or try to be very active, right? So if you know how to trade, this is the time to capitalize on it. And if you want to trade live with me every day and you want access to all of my alerts, click the link in the description, come and join us. If you're only interested in the investing and stock market analysis portion of the Discord and you don't trade, that is a very fair $35 a month. And we opened up a few more spots of that. So click that link in the description. If you want to trade live with me every day and you want my swings and day trades, etc., that link is also in the description. But let me know what you think. Is this just a whole bunch of hoopla, the DeepSeek situation, or does this have real dangerous implications for the AI bubble? Is this going to lead to the first AI bubble burst? Let me know what you think down below. I'm very curious, and I know I'm probably going to get a bunch of Chinese bots in the comments too, but I want to know your real comments. So let me know down below. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.